Potential danger really for our markets and global markets at large. And who better than Jonathan Schiessl, Investment Director at Ashburton Investments, joining in on the show right now. Jonathan, hi, good afternoon and good morning to you. Good to have you on the show as always. Have to talk about, Trump's latest threat with regards to China. Is this a knee-jerk reaction that the markets are seeing, or are we again looking at a renewed trade war threat?
I guess the reality is that none of us really know how much this is bluster from this so-called man who's supposed to be this fantastic negotiator.
Yeah, seems to be the case. Have we snapped that line with Jonathan? Yeah, we have snapped that line with Jonathan. Okay, I'm going to come to him in just a second. But as Jonathan was saying, you don't really know where this is going to end. Yes, today you're seeing a knee-jerk reaction, but how long-lasting is it going to be, considering Donald Trump has said, chalk out a list of $500 billion worth of tariffs and the goods which are exchanged between China and US, and their potential a tariff hike could be implemented. So you don't really know how this situation is going to pan out. Is it really one of those empty threats? Is this going to really take some material action on ground? And then how will China react, considering just going by the recent history, it was all sour grapes when it came to Canada, at least. And one would have thought that that Canada and US are the best of allies. But yeah, Jonathan, you were making your point before we snapped the link with you, because you don't really know whether this is a bottomless pit. Is it just an empty threat? And how long-lasting could the reaction be by global markets?
No, absolutely. And I think on top of all that the uncertainty that we just don't know how far this can go. I think markets have been very sanguine, up to this stage. But I think we're reaching a point now where real worries are starting to come in. And actually, if you look at, for example, MSCI China, compared to other emerging markets, it's behaved incredibly well. It's one of the few emerging markets which has consistently been outperforming, particularly year to date. So if cracks begin to appear in some of the Chinese indices, it does put a bit of a question mark over the whole emerging market complex, because even though India has been underperforming to a degree, the sort of North Asian emerging markets have been really holding up very well. So yes, it does provide quite a lot of uncertainty into the backdrop we find ourselves.
Indeed. The other uncertain element, Jonathan, and especially given its linkage and sensitivity to markets like India, is crude. While it's definitely retraced from those $80 per barrel marks, but you've got a very critical meet over the weekend in Vienna, where OPEC is going to be meeting. Do you think there could be some resolution in sight, and could we see a cool-off, and a long-lasting cool-off at that, post the OPEC Vienna meet outcome? We seem to have snapped that line again, unfortunately, with Jonathan. Okay, we're going to try, and Jonathan is back with us. Jonathan, if you can hear me clearly, and keeping my fingers crossed that the line doesn't snap this time too. You were talking about how critical the OPEC Vienna meet is this time.
No, absolutely. There's been a lot of talk about increased supply 1 minute, and then obviously other members saying no. So there's a lot of debate over that. And then obviously there's some interesting articles doing the rounds this morning that, if we are at peak oil, then a lot of the majors won't be investing here. So, and that can obviously drive the oil price further higher in the short term. But obviously, I think when we look at the global economy and you look at the demand side, is China slowing down? It does seem to be slowing down. Are we late cycle in the US? So I think at the moment where everybody seems to be wildly bullish and projecting the oil price to go ever higher, it does feel a little bit that consensus positioning and the sort of view on the oil price is quite optimistic at the moment. I guess from an Indian perspective, the ideal scenario, or not the ideal scenario, but the best we could hope for is the oil price just stabilizes below $80 a barrel, and then maybe that'll have an impact on demand to an extent, and I believe we've seen some early indications that oil demand in India has come off slightly, but obviously still very high. The oil price is certainly something that we're focused on.
Jonathan, this is Siddharth joining in conversation. Now, in midst of US Fed increasing interest rates, in midst of this tariff war between US and China, which will definitely not remain between two countries and spill over to the entire globe. And it would have, its own negative impact on others. How do you see movement of US dollar? Do you think that the strength we have been seeing since last one quarter in US dollar, that would continue? And we are also seeing some of the fragile economies, the currencies. I think we have snapped that link again with